Good evening, everybody. Good evening, good evening. What up, Praveen? Hello, hello. How are you guys doing on this Sunday night? A little bit of a different show tonight. A normal show as far as interviewing another trader. I have a really incredible trader here with us tonight, someone I know that we all respect from the T3 NewsBeat live room, who trades with us regularly, who has taught us so much. I've learned so much about trading from him, just from chatting and from reading some of the stuff. What up, Sufian? I'm not paying very close attention to Discord, FYI, so if you guys are in there, I'd throw your comments in YouTube. I'll see them quicker. I'll be interviewing him in just a few seconds. We're going to kick that off. He's going to go through what he does, his strategies. You can ask questions as you go. I'll try to scroll back and get through them. If, as we're going through, I miss them, just throw the comment down again, and I'll make sure that I get to it. We have about an hour and a half, so we'll get to as much topic as we can here. So thank you guys for hanging out on a Sunday night with us. I really appreciate it. I think this will be fun. This will be a slower week for me. I've got tonight's show tomorrow, and then I'm driving to Georgia on Wednesday, so there won't be a show on Wednesday, so I'm going to try to get as much out tonight and then as I can. So thank you, everybody, for coming out. I'm Gator. Welcome to a Sunday special. Swamp is looking awesome tonight, little Curbster. So with me tonight, he won't be on video, but we will have his screen share up as he goes through his stuff in just a second, is the amazing Mr. Kelly, the killer of stocks, of the stock market, the absolute destroyer in all market conditions. And he has been gracious enough to come on with us tonight and to kind of talk through what he does, give us some education. So Kelly, with that, welcome. Is there anything that can you give us a history of you, of your trading, of how you got to this point, and all that fun jazz? 1 second, Kelly. Sorry, I'm getting some people saying they can't hear you. I'm not sure why. Give me 1 second, guys. No, it's the headset audio. Let me see what I can change here. I'm sorry, guys. Everything's showing up on my end, but it's not coming through. No, you're not popping. Give me 1 second, guys, and we're gonna fix this. If I have to, I'll go on live and come right back. So let me try something. Hey, so that's on. Yeah, you hear me, but your audio's not coming through. So give me 1 second, guys. I can hear you. They can't hear you. So for some reason, the audio is not working. I had to restart all of the stuff on my computer, and my settings, I think, might have got messed up, but they shouldn't be. So I'm not sure what the difference is. Volume's up all the way. Give us 1 second, guys. We'll get this figured out. This isn't. Hey, they go all the time. This is gonna fix it right here. All right, can you say something?
Test 1, 2.
All right, Kelly's on. I figured out what it is. Bam. Hey, that didn't take me too long, guys. So sorry for the introduction. Y'all can hear him now. All right, you got him.
Everybody
Sweet.
hear me?
Yep. I'm showing your volume coming through on my end. So sorry again. We'll start this over. I'll edit this out, but I really can't because we're live. So that's the joy of doing a live show. So again, Kelly, now that the people can hear you and you're not just talking to me, can you give us a little bit of history of yourself, of what you what you do, how you got to this point, your trading journey?
Okay. Hey guys, welcome again, NewsBeat member families, and welcome to the YouTube. I just want to start out by telling you guys that I'm not a career trader. I'm not a professional trader. I'm not a professional teacher, but I have been trading for approximately 11 years. been profitable for about 5. And I've lost quite a bit in those first 6 years trying different mentors, trying different things. And, and not spending 100% of the time on it either, because I'm a blue collar worker. I was a union carpenter for 25 years and started my own general contracting business up to about 5 years ago, where I kind of closed the doors and just trade full time now. In my later years, I'm 60 years old, and I've been trading, like I said, about 11 years. And me and Gator actually have a lot in common. We're both in the service together. Not in the same service, but we both were in the service. We're both traders. We both love golf, and my kids are grown. His aren't. Anyway,
you won.
Anyway, so what I found is over time is the thing that got me the furthest, the quickest, was discipline. And that's what the military helped me with, was following a certain set of plans, like your OODA loop, seeing what's happening and acting within that orientation of what you observe, and sticking to your plan and have a plan. If you don't have a written plan as a trader, you are effed. I'm telling you right now, if you don't have a written plan in front of you that makes decisions for you, because your mind will lie to you, your mind will play tricks on you, your mind will get creative, and you'll lose your money, because that's how the market is designed. It will take your money unless you have an edge, and your only edge is consistency, and your only consistency is that plan in front of you. So you gotta have a plan. Hopefully, I've drummed it in the room, I don't know how many times, pounded the table. You guys have to have a plan. So please, if you don't have a plan before you make your next trade, write it down. It doesn't have to be extravagant. All it has to have is your maximum daily loss, how much you're willing to lose in one day, and shut it down. Divide that by how many trades you think you're going to take. 3 to 5 trades is what I take. Those who do see strategies, which I don't, well, I do sometimes, I can't say that, but I'm not in and out really quick. So that's a lot more trades. So for you to figure out your maximum daily loss per trade is a lot more difficult, because it's a time thing. You're in it for 3 to 5 seconds. If you're Eddie, you're probably in it for 1 second. But, I just happen to have a different mindset when it comes to holding positions, because I know where it's going. Even if it goes there away 5 cents and then takes all that money away, but it will eventually get there. And I got the patience for that, because I've seen it happen over and over so many times. So that's kind of where I came from, the school of hard knocks. And, and today I'm profitable to the point of probably 80 to 85% of the time, which is better than any professional poker player. And if you're a professional poker player, you're going to lose hands. You're going to know when to fold it. You're going to know when to get out of the game, because the cards aren't going your way.
Kenny Rogers.
You're going to know. What's that?
Kenny Rogers, the gambler.
Yeah, that's it.
Know when to hold them and fold them.
Know when to fold them. That's exactly right. So in any case, if you can have a high percentage, over 50% of the time, you can make a lot of money in this market. Just based on how much you leverage yourself. But that's pretty much it. And, what I can do tonight is show you basically how I trade. I'll show you the last 2 Tesla trades that I took and why I took them. And it's all based on the strategy that I learned over the years.
Yeah, I'll come back to, so I want to at some point come back to some of the things you said there, but let's go ahead and roll into it, and then we can kind of come back. But I love something, and I want to hit it that you said before we jump into it is, and I don't do this, but now I think I'm going to start it. And like, I always have a pad near my near my computer. It's like, write down a plan of the day. Mm-hmm. Like, actually write. Like, there's something I think about, and I've read stuff on it before, about physically writing something down, how it triggers remembrance. It's very powerful. Like, people are like, how, and I hadn't thought about this until you said it. So, you brought some of this stuff back in my head. How do you actually kind of force yourself to do that? It's not the same. I think Market even said it at one point. It's not typing. Typing doesn't reinforce it in your head. No. But a
There's a
pen and
magic in the
paper.
pen. There's an old saying. There's magic in the pen. Whether you're writing something down that bugs you, you have a resentment or what have you, and you write it down and you burn it and throw it away. It helps you, forget it. Or you're writing something down for memory or something down for, like for us as traders, we have to have a plan ahead of time. And it should be a consistent plan, not something new every day. You want something that's consistent, that you go through, just like a pilot has a checklist, going through turning things on, checking levels, watching everything. You have to have a checklist to go through before you take off, before you want to put your hard-earned money into a market that has the smartest people, the most clever people, they have the most money in the world. And if you're going to go in there with your little penknife and they got bazookas, guess who's going to lose? So you really have to have an edge. You really have to have a plan, or you're going to get taken out. Simple as that.
I like it, Rose. Get a fountain pen, dip it in ink, write it down, dip it in ink, write it down. I think that would even make it more stick in your head.
As long as it has a feather at the end.
Yes. Yeah, I should totally. I feel like I want that in my new office when I move homes this summer. I want something like that. It's like I want like a little pipe stand with a pipe and a little feather and ink quill pen that I can sit down there.
Perfect.
Why not?
Yeah.
So let's jump into what you do. So I've some of us know, some of us don't. So we're gonna start rudimentary level. You said it before we came on earlier, just like elementary level. Can you describe, and I'm going to jump over to your screen so now everybody can see your screen. I'm going to throw my face out of the way so everyone can see what I see right now, what you're sharing with me. So just can you talk us through from kind of step one of your day of writing down your plan, what you're looking for, what you do, and how you pick these trades and these names?
I will. Okay, so I have a 16 stock list that I pretty much play with every day. And there's certain ones that I focus on and certain ones I don't. And how I do that is what's called compression and expansion. And so if you can see my pen here, what I'm going to show you is the market does two things. It has two states, basically. It has what's called a narrow state. That's when price, and you can see here, price and the moving averages are all tight together. This is before the market opens. This is the market open right there. This is the night before, okay? This is Tesla, as we all know and love. Okay, and so what it ends up doing is from the 200 being our base of blast off, as you can see here, and as you can see here, it goes from a tight state to a wide state. And it does it over and over and over again. That's all markets do. They breathe. They go in, they go out. They go in, they go out. That's all they do, and they might do it in an up trend or they do it in a downtrend. And as you see here, Tesla, since the 200 is slanted down, is doing this in a downtrend. Now our trend is micro trend is followed by the blue line. So what I call the red line, which is the 200, is the river, and what I call the blue line, which is the 21, is kind of like the rapids, the pressure of where the current's going to go. So even if you get it wrong, like say you don't get this red takes green right here and jump in, even if you just jump in anywhere right here, and you have a stop above the bar above it, you're going to catch all this money right here, until green takes red out and you get out. I mean, it's really that simple. That's how I look at the market.
Your screen
that simple.
Froze for some reason. Can you
My
move your mouse
did?
a little bit?
Can you say it?
Even on Zoom, it froze. It's on your end, I think. Okay, is it moving? Yeah, I see it now. It's up at the top. So it's not the cursor? Yeah, I see you now. You're good. You're back on. You're good.
Okay.
It's not the
can you
mouse,
see,
guys. Yeah, you're
can
good.
You see can you see the drawings?
No, that might be part of the issue. I can see...
You can't see my Epic Pen?
It's not moving, no. I can see your cursor. The Epic Pen's not moving on my end.
Oh, that's weird. Okay, well, that's too bad because that's like visuals is the most important thing.
Mm-hmm.
Anyway, Gee, what can I do from there then?
We
Let me
can
see if
see
I
the
can.
charts. It
Huh?
might be an issue with the software. I'm not sure why it's not kind of transposing through Zoom.
That's
Yeah,
it.
maybe
Yeah.
if you maybe increasing the pin size, but I'm sorry for the technical difficulties, guys.
Okay. Let me try. Can you guys see that?
No, nothing's popping up through.
Nothing. Okay. All right. So look at the beginning of the day on Wednesday. Everybody see that?
Yeah. Yep.
Look down at the bottom. You'll see Wednesday, and you'll see this dotted line which separates the day.
Mm-hmm.
And you see the little pink square?
Yes, they do.
Okay. So that is compression. That is, price and the moving averages tight together. Okay. And I play basically from compression to expansion and back to compression again. So on this day, it gapped up and gave you a red bar, which I didn't pay any attention to because red above the 200, I ignore. The only thing I go after is green above the red, green above the 200. That's the only thing I care about. But when I saw these tails on the first 2-minute bar and the third 2-minute bar, I knew it probably wasn't going to go up. It was probably going to go down. So my bias changed from up to down. You guys follow that?
So you're looking on, so they can see my mouses. So I've got my mouse on everything, and I'm kind of using that. So at these early ones, as you broke down below the blue line, which is your 200, those.
No, the blue is my 21,
Okay, the blue is your 21.
and the red is the 200.
Okay, I see it. So as it broke below that, those next,
Right.
that's when you started
That's when I
playing it.
became bearish,
Yep.
and I just jumped into the red.
So at this point, guys, if you can see my cursor here, this is where Kelly got in short on Tesla when it broke this 200 level. So this is compression with all this tight moving averages in here. If you guys can see this, when it's in here, you got the compression, the 200. This is what he's talking about, this level.
Right.
It gaps up into Wednesday, and then it sells off and goes down below the 200. When it gets through the 200, this is your entry.
But the important thing to remember here is see the green bar there that took out the red? 1, 2, 3, 4. The fifth bar?
On Wednesday?
Yeah. See the fifth bar of the
Yes,
day?
right here.
Okay. The reason I ignored that is, like I said earlier, is there's 2 tail bars there. And tail bars, especially at the open, are very, very powerful. They typically mean that this price rejection, that people are selling. Okay, so that's why you don't jump in that green takes red right there. And that's what gave me the bias of going down. Okay. Understandable?
Yes. So
Okay.
we'll do this like we're teaching, because for some reason my mouse is going through, so we'll use my mouse to go through, and so I will act as the person who is learning, and obviously I am learning, so who is going through this. So
you know what? I've got you on another computer. Oh, there it goes. It's starting to move now. Okay, good.
yep, you're moving.
All right, I'm moving my chart. Okay, so let's go to
We can see you now. We can see your cursor now.
Okay, you can? Okay,
Yep,
cool.
you're good to go. So we can see your
All right.
drawings.
So coming on Thursday, so I basically played that one just one leg because I didn't like the contradiction of the day, that there was compression, price started above the 200, and I just let that one. I just took one leg down. And that was it. I was done for the day, and it was quite a bit of pricing, as you can see. It's probably like $40.
Mm-hmm.
But that's the end of the day for me right there. Now, this day is even more important because this stuns a lot of people, okay? Because remember what I said, you can still see my cursor?
Yes, sir.
Yeah.
We can see everything now.
Okay, let me see if you can see my Epic Pen again. Can you see that?
Are you drawing? No, we cannot. So I think it's the drawing utensil that's not
Okay.
shared. So if you go back to your cursor, how you were just at it, everybody can see that.
Okay, back.
And if you would like, and you want to do drawings, you could send them to me via email, and I can post them in Discord afterwards for people to watch this video again and compare your drawings with that, so they can have it sitting right there. I think that might be a good way to do it. So you guys can hit me up after this if you're okay with that, Kelly.
Okay, there's my cursor's back. Okay.
We can see it.
All right. Okay. So come Thursday, we have, price that's not real tight, but it's not real wide either. It's kind of middle of the road. Can you see how this is kind of middle of the road?
Mm-hmm.
But pre-market, you can see that price is all the way down here. So what does that tell you? That tells you that you're in a wide state on the open. You got price separated from the 21 and 21 separated from the 200. That's a wide state. Now, the market, like I said earlier, can only do two things. It can either go wide or it can go narrow. That's it. It can't go anything else. And it's like this 200 is like a magnet. It'll always come back up to it. So what I did at the open was I knew it was coming back up here. So I put a fib on the opening price up to the 200. That's what I do. And my target is right here. It's always halfway between opening price and the 200. That's just my theory in the beginning. Now, I don't get involved in this until green becomes larger than the last, say, hour of these bars. Say these bars, you can eyeball it and just say, okay, the average size is, say that's the biggest one. Once green becomes as big as that red bar, I just jump in. Without any questions, I just jump in because I know 87% of the time this trade works. And I put my stop below this big green bar, but it's not big yet. It's only this size. So it's a fairly small risk for me. Mm-hmm. And I play this guy up to 50% level. And so what I do is while I'm playing this thing, I'm just watching. I'm sitting back sipping my coffee because I don't care until it hits below here. That's where I jump in action. My job is to protect what I have, and my protection's already in. So I just sit back and watch. When I come to a red bar and that red bar is taken out, I add half a position. So I'm adding at every red bar that is taken out by green, I add. And then I just sit back again and sit back again and sit back again. Boom! I'm out right there and I am done for the day because I got fat really quick. That's 2, 4, 6, 8, 10, 12, 14, 16, 18, 20 minutes into the day. 20 minutes into the day. 50 contracts, $40. You guys do the math, okay? Now, there's a second trade here, which I did very light because majority of the time when you have strong momentum, especially this first leg, let me get rid of this Fibonacci tool, okay? Then when you get to your strong leg is finished and it's past the 50% already, and I'm out and I'm just watching, okay? It starts going back. So I know this is coming back to a retracement point. So I fib this guy from the highest high to the lowest low. That's my fib tool. And I've got this thing set up to where these numbers are inverse. I know it says 75, but it's really 25. This says 66, but it's really 33. This says 38.2, but it's really 68.1. They're inverted, so I can have my extension tool all in one movement instead of doing it twice for speed sake. Okay, so this thing retraces down to about the 38.2 point, which is the golden, if anybody's ever done any study on fibs, that's the golden ratio, 38.2, and it's less than 50%. So anytime a stock has a strong leg, it retraces less than 50%, you're going to get a new high, which means it's going to get higher than this guy right here. So you automatically know you're going to get money to there. Automatically. It happens 9 times out of 10. That's 90%. If it goes less than 50, it's going to give you a new high. Now, I automatically have the 127 in here, 138, and the 161. Now, from here, a 161 will give you a measured move from this move to this move would be a measured move. So, 1 to 1. But I'm only going after 127. That's all I ever go after. And if green took red, which it did right here, And I don't worry about these wicks. I go by the real bodies. Once the real body of the red's taken out, I jump in again. And I just play this guy and play this guy. I know I'm getting a new high. So now I got my new high. So what do? I move my stop from down here to under the new high candle. And then as this candle finishes, I move it under there. And as this candle finishes, I'm out. And that's it. It's that simple. That's how I do it. And if you have your risk right, you won't be all nervous about losing this candle right here. You won't be nervous because that's where it all started. And you won't be nervous about losing this red if you lose it. So what if you lose it? You got how many more chances? It depends on your risk factor. And if you have that all written down, you know how much you got left. For me, I have a maximum daily loss. I divide it by 3, and that's my risk on each and every trade. So, and I usually don't take more than 2 major trades. So I'd probably trade this. Okay, I'm in it. I add to it. I'm out. I'm in this one. I added to this one because this is a hidden red takes green. Because what did it do? It went up, it was green. It went down, it's red. It got taken out. That's a hidden red takes green. And I jump in for another add. And then I'm out here. So my risk is defined. My risk is defined. And I just let it go and sit back and drink coffee and not worry about it. And that's my psychology. And why my psychology works is, 1, I have the discipline to do it. 2, I know my worst case scenario in front, not like, oh, is this going to work or is it not going to work? And how much am I going to lose? And I'd have no idea. Boom, I'm down $1,000. Boom, I'm down 2,000. What am I going to do? Oh, and panic sets in. Well, I'm never panicked because I know exactly to the penny how much I'm going to lose, and I don't care. Next,
just next trade, the next thing that's coming up.
The next trade, yeah.
So it's not like you're opening up. Sorry to interrupt, but it's not like you're just opening up for the people listening. You're like, okay, this strategy's here. All right, I like this. 100 contracts. Here we go. Let's see what happens. You're not just blindly jumping in.
Mine is very simple. The rules are in place. I put a X amount of contracts in every day or shares based on the stock. But if I'm trading Tesla, it's always going to be options. I do near the money, sometimes way in the money, depending on how much conviction I have. And I just sit back and drink coffee. That's it. Chit chat and tell people what I'm doing in the chat room. I tell everybody exactly what I'm doing right after I do it, within seconds. And even if you don't get in when I get in, it doesn't matter. It's not a C strategy. It's a wait and see strategy. It's going to pay off 87% of the time.
And it's probably about that 87% of the time that we see a big boom coming from you in chat. And I'm just sitting here, and like when I think it's getting to where the level you're going to exit, I'm usually like, I'm just waiting for Kelly to tell me he's out of this. And I might have scalped in 5 or 6 times on that run, but I'm like,
Yeah, so the hardest part is trusting it. That's the hardest part. So that's why if you're going to try this this methodology that I use, and I'm just showing you a little tiny tip of the iceberg. If you try this, make sure you only do it with 1 share or 1 contract at maximum, so you don't get hurt, and you're not pressured to see, if say this I jumped in here and it went completely red, my stop is 1 cent under here. So if it goes right down to the bottom, but it doesn't break that 1 cent and goes back up, a lot of people will panic out like halfway down because they're down, a couple $100. So what? You have a rule in place. The rule is 1 cent below the low. Always 1 cent below the low. If it doesn't get taken out, you won't get taken out. And then it comes all the way back up. So you can't let your heartbeat, your anxiety, your worry, your indecisiveness, your undisciplined self, your mind, your ideas, your attitude, your imagination, you can't let anything run that. The piece of paper in front of you, your plan, is what runs the show once you get in. Once you're in, that your job's done. Your job is to protect the funds now. And you put the stop in so your funds are protected. And if you're in say I didn't take profit at the 50%, which that would never happen because I always do, especially when it's under the 200. Then you would just move your stop to the next low when price becomes 80% to the last high. So when price gets to here, you would move your stop from here to there, even though you could lose all that, but it wasn't yours to start with. But when it's underneath the 200, I never do that because you're going against the river flow. And the only time I go against the 21 is in gaps away from the 200, gaps away from the 21, and it's telling me it's opening up in a wide state. And it's only going to go back to a narrow state. And here we have our narrow state. Actually, if we move further down the line, it gets even narrower. See how it got narrow? It went from wide here, back to a narrow state. And if we continue down, let's see it go wide again. The rest of the day it didn't, because remember on Friday Tesla was crappy after those first. See, there's three legs here. They're hard to see, but the first leg ends here. It pulls back. Second leg is here, pulls back. Third leg is here. And what I've learned over the years, after three legs, the stock is pretty much done, unless something really news driven is in it. Then it'll keep going if it's like an earnings play or war broke out. Imagine that. It's pretty much a dead play, and that's why you should just get away. After that, get away from the market. Why do you want to stay and give your money back for what? It doesn't make any sense. So I get all my money in the beginning, in the first 20 minutes to hour, depending upon how the market's moving, and then I shut it down. And I'll just chit chat. If I'm hanging out in the house, I'll chit chat, or I'll go to the golf course, go practice, go play, do some yard work, enjoy life. That's what this job gives us, to enjoy life, not to be the slave of it, not to be, causes gray hair and anxiety. No, it's to enhance our lives. And there's certain ways to do it. And you just got to play smarter, not harder.
There's a way to actually get the most out of this job, and it's not necessarily sitting there trying to catch every single penny that you can pull out of the market. Sometimes doing other stuff is, if you're saying you can sit here and trade, which obviously you do, for an hour or so, make, incredible amount of money or whatever just you need to make, and then go enjoy your family, enjoy your life, enjoy, different things that you like to do, that's a win. And that's something that's going to make you want to keep doing this, right?
Exactly. That's it. That's what it's here. It's a blessing for every one of us to even have an opportunity to do this. And, I'm so grateful to God that I'm able to do it and be able to be, proficient at it, because I wasn't for 6 years. Trust me, I lost a lot of money and a lot of hair in the first 6 years because I was stubborn. I'm a carpenter. I do things my way, and until I was able to surrender to allow the market to show me where it needs to go and what it needs to do, have a plan in order to work around that, be able to observe, orient, decide and act. Every single time I'm either close to either getting out or close to getting in, and you got to pan out, like Geronimo says a lot, you got to pan out to see what the market's doing, because the cycles are very important. If you watch the cycles, the accumulation, markup, distribution, markdown, those are extremely important. But the way I trade, it really doesn't matter. As long as it's not in distribution or accumulation stage, because that's when market is chop, and there's no trend to chop. And when you have a flat top and you have a flat bottom, that's the points where the market is choppy, and that's where a lot of people get killed. Even if you're doing C strategies, you'll get killed because even if you get out fast, it'll whipsaw against you so fast. So you just watch it. If you guys are interested in this, just watch the market panned out on a 2-minute chart and watch how often price goes away from the 200 back to the 200, away from the 200 back to. It's a breathing mechanism, and I play it the breaths by the Fibonacci numbers, which is all found in nature, and which a lot of algos are programmed to. So they're a self-fulfilling prophecy, because a lot of traders play to them too. So you got the algos on your side, you got major hedge funds on your side, you got nature on your side, and you got probability on your side. So these are the things that give you the edge. And if you got an edge, you're going to make out well in this market.
And this is a great edge and a great thing that we can start applying and learning. And I got a few questions here about the stuff we've gone over so far, and then maybe we'll look at a few other things. But so I see, let's see. If I miss your question, guys, come back, but I'm just looking down. So Jeff, he asked the question, when do you get in on the first green bar for the first trade? I'm not sure which one he's talking about here. I assume he means this first one here of the day that we're looking
this
at
one
now.
Here?
Yeah, when in that bar do you get in?
Okay, like I said in the beginning, looking back at the last hour of the previous day, we look at the size of the bars. Just eyeball it. Remember, with the market, there's no straight lines. You're not playing your these straight lines. These don't have to be exact. You don't have to measure them, but you eyeball it. Okay, these are a certain size. As soon as this price started way down here, it was nothing. It was a little black line. Then it became a little green. Then it became a little more green. Then a little more green. As soon as that green is as big as the average in your mind of these, I jump right in, because the rubber band is so expanded right now, it doesn't make any difference, because it's going to snap back in this direction.
200.
Towards it, not to it, but towards it, at least halfway. Every single time, halfway. And that's what I play it to. So you don't have to wait for this whole green bar to develop, because look at all that money you lost between here and here. We're talking like $30. You're going to really give up that just because you're worried about getting a good price? And then once you did get in, it goes against you halfway.
Yep.
My mentor, what he would do is get in here, he would let it go up, and he would place limit orders down this bar. 1, 2, 3, 4, 5, all the way down it, till all the way to zero. And as this price come down, it would get more. He would get in more. He would get in more. Now, I don't have the cojones to do something like that, but he does, and he's been doing it for 35 years. I'm only in it for 11. So, so he's, by the time he's down here, he's got like over 10,000 shares, of the stock, and he just lets it go 50%, and he's done. You can put the calculator to that one, how much he makes a day.
If you're doing this for options, how do you calculate, like you say, let's say hypothetically it's a $5,000. Do you, for people that are asking, I think someone asked this in chat, and it'll be in a specific question I get later, is, okay, well, how do I calculate an exact loss? Would you make it the worst case scenario?
You won't get an exact. Say you figure, you look at this pre-market. You kind of know what it's going to do ahead of time, because it's gapped down. You see that information. Your pre-market price is over here. You see it coming all the way down to here. So you kind of eyeball it that, okay, this is going to be, it's going to be a wide state to narrow state. The halfway point's around here. I'm looking at these bars. Let me find the biggest one. Okay, say that we find this one. The high low is about $5 right there. So you figure, if I'm going to risk $500 on the share on this trade, I can only go one contract. Mm-hmm. So you can only go in one contract. Okay, that's a quick eyeball way to do it. Especially at an open, this happens so fast that you got to know what options, especially in Tesla, you got to know the value of these options and how much you'll lose if it goes against you. You just have to know the stock. Now, I got 16 stocks in my stable, and I know all of them pretty well. So I know how much I can lose if it goes against me. So I kind of ballpark it. You know, this one, I have a 9K a day maximum stop, and that's for the full day. And I just divide it by three, and that's how many contracts I'll jump in based on the size that I eyeball. And everything's eyeball. Nothing has to be exact. Like this point here, this Fibonacci. Oh, it didn't hit exactly. Oh, it didn't hit it. Who cares? It's in the area. You know, this trade right here, you want to jump in because the 21 is going up and green took red. Well, it's not right on it. Who cares? It's near it. It's near it. That's what's important, is being near something and not far away from something.
Mm-hmm.
When you're far away from something, the 21, it's time to sell. When you're close to 21, it's time to buy. So again, this is just eyeballing it, and you have to know the stock. So that's the best answer I can give you.
That's a good one. Time in front of the screen. We've said it before. The time that you actually spend in front of the screen, knowing the stocks that you trade, knowing the level 2, knowing how the options move and all this stuff will help you gain that confidence and just that understanding of how these names work and how these names trade. And everyone is different. AMD is different than Tesla, is different than the triple Qs, is different than, whatever.
Yeah, everything's different. Their IV's different, and their options, everything's different. So you got to be familiar with them. And I always, pound the table about time in the chair, because you need it. If you don't have time in the chair, you shouldn't be trading any size. You should be trading one of everything. And you may not make a living at it, but you'll do a lot of learning and save yourself a lot of money. Because if you try to jump in Tesla with 20 contracts and you don't know what you're doing, and it's like $9 between here and your stop, you're going to get creamed, if you're not prepared for that.
Yep. If you were a new trader and you bought maybe at the top of that first candle or midway through it, that second candle happens, that red one, if you didn't trust what you were doing here, and that third candle, look how much it dropped, would be shaken 50%. Out. Yeah, which
is pretty neat, is that 50% is my magic number, as you can probably tell from everything I say in the chat room. Look where this candle retraced to, 50% of this green bar. And a lot of programs, a lot of hedge funds do exactly that. They place buy orders all the way down the bar, and the heaviest one is at the 50%. And then they go lighter as they get down here, and probably two-thirds of the way they stop. But look at that tail. Mm-hmm. It hit all those limit orders, went whiplash. Rocket. This bottoming tail bar is a bottle rocket. It's going to send it up, all the way up. That's what it does.
Yep.
So that's what I think of bottoming tails, or hammers, I call them bottle rockets, to shoot the price up.
Love it. Or down, based on the previous chart that you showed. Upside down.
Right, or down. That's a topping tail. Topping tail sends you down.
I assume you mark it in your market orders, or do you limit in on your?
Everything is market in and market out.
Okay.
It happens too fast to, unless I'm going, like this particular trade, I could have put a limit order at 50%, but I was just watching it and keeping my trailing stop, bar by bar after it retraced, up to this point.
Praveen asked, and then I want to kind of get away from the question just a little bit and jump back into some of what you're saying about the Starks. But Praveen asked in a recent video, Oliver Velez spoke against trading options, and he said that they're more of a hedging tool. And he just asked for your general thoughts on options versus common stock.
Oh, I love options, and I think Oliver doesn't like options because he doesn't, use them like he uses stock price, and he's got a $5 million account, so he can buy tens of thousands of shares and have a very low risk compared to options. That's why he doesn't, he feels that options are higher risk, and he doesn't need that risk, so he doesn't teach it. So that's my observation.
So yeah, Mr. K-Man, I'll come back to that one. So K-Man's asked this like 3 times or 4 times, so I'll answer this one, and then I want to talk about identifying names on your watch list, how to pick the ones in the morning. But he's asked, can you please show your trades and thinking from the open of Tuesday, February 22nd? Say Tesla or whatever you traded on that day. And if you didn't trade Tesla, then why? So I don't know if you can go back that far, Tuesday the 22nd.
That's an odd question.
Yeah, I'm not sure why that. I mean, teach there.
I'll look.
Yeah, see if you can look. February 22nd. Your trades on that morning, Tesla or not Tesla, and why you chose it, or why you chose another name.
Okay, yeah, I did trade this one. I actually shorted it and got out quick.
Okay.
Okay, can you see it? See it on the screen?
Yep, we got you.
Okay, so again, we were in a tight state here. You got price, 200, and the 21 all tight together.
Mm-hmm.
Okay, your first bar of the day was a green one. You ignore it. Absolutely ignore it. It hasn't, because you don't want to trade green under red unless it has a wide state going on. But you're from a narrow straight state, and it really hasn't gone far enough yet. So I let this guy go, and I let the state become wide. Now you can see that from. I wish I could use my Epic pen, but I really can't on here because it doesn't work.
Yeah, we'd have to
But
share. So change how you share your screen really quick. So click on your share screen, and instead of share your actual desktop screen, and then we'll be able to see it. You're actually sharing Zoom itself. Try to share your actual desktop screen, and that will allow you to draw. And then you can just maximize your drawing.
Oh wait, it's got to annotate on the Zoom.
Yeah, see, you can do that. You can also annotate through Zoom. You should be able to draw and do stuff through there. And that's a good question, Rose. And actually, thanks, Mr. K-Man, for bringing up this one, actually, because a lot of people who are just learning this would see this, and early in the morning without, let's say, a trained eye, like if you showed me just the first bar here and the first bar of Friday, or what the last trade, I guess it was Friday, yeah, I would be like, okay, we go long here.
Right, and if you okay, how do I get?
And then I probably could have gotten wrecked, which is what anybody else could have done, comparing those 2 days, because you had a gap down and a big green bar.
Hold on 1 second. I'm trying to get out of this pen so I can control my. I don't see how to get out of it now.
Let me look at your screen. Might be able to tell you.
I got the toolbox up and it's got the pen, but I can't get from the pen to my screen where I can.
Try hitting the exit button. There you go. Yep, just the exit button did it.
Okay, cool. All right, so let's go back and kind of look at the chart and make little comparisons in the past. Okay. Let me see if I can pull up that pen again. Okay, you can see it, this pen now, this green line?
Yes, we can see your drawing.
Okay, this is like an average away from the 200.
Mm-hmm.
This is kind of average tight in this area.
Okay.
When you compare this away from this, you can tell it's really not away and it's not narrow. It's kind of in between. All right. So you really don't have a reason to buy it, because number one, it opens here and it's not that far away, and your first green bar, if you're going to be away, has to be like far away, like you had, like in the last example I gave you. Give her this again.
Is there a percentage, just Astros, or a dollar amount, or is it just an eyeball?
No, it's just eyeball this now. Okay. See the difference between the distance between that one and the last one? Yep. I mean, it's quite a difference. And if you're not used to seeing, especially Tesla, if you're not used to seeing it on a daily basis, you're not going to know these kinds of things, and you're not going to have conviction. And if you don't have conviction, don't even bother playing it.
So a way to do this, maybe, if you're looking to trade a name, is to do a chart review of the 2-minute and to look back over multiple days and scroll through them and see what long and close looks like for that particular chart.
Right.
So right now.
And also as this green bar is developing, look where the 21 is.
Mm-hmm.
Is that between your price and you're 200. No, it's above the 200.
Yep.
And it never really gets below the 200 till here when a first red bar starts, and it's just starting. And then it really doesn't get down until you're into this tail. Okay, and that's when I jumped in. I jumped into this tail and took it up 50% of that move down, only because I didn't trust it, and it was kind of a choppy market that day. But that's not something I would say a new person should even bother. You should be playing stuff that's very close at the open to the 21 and 200 or extremely far away. And if it's not none of those two, go on to your next chart, because you're going to get spanked.
Mm-hmm.
You have to know these names intimately, or you're going to get it. So you have to stick with, something, AMD, which acts a lot like Tesla does, but is a lot less painful if you get stopped out. Hope that answers.
I think it does. I think, and that is, so how do you pick these names? And Con, that was a good question. Like, K-Man, or I say Con, but I just read it. So, K-Man, that's a good question. A good contrast in the day is now looking at that day, because a very good question, and it is the difference. A lot of people just seeing that on a choppy day where something just didn't do exactly what it did on Friday. It's good to kind of see the difference, and to have Kelly explain it like that. So very good question. Thanks, I appreciate it. Sorry, just looking at it at the moment, it didn't. I didn't know what was specific about that day, but good question, and it's great to see the difference in these two, because that is a way that you can get hurt. So early morning, sure, when you're looking at these things.
Okay, what I'm looking for is, like I said, I don't know if I can go to it right now, but I'll try. Is I have a 16 chart, 16 names that I look after. Can you guys see this? No, you can't.
No, you'd have to. You could change your screen, the one you're sharing, by clicking on that share screen thing. You could jump over to anything if you want to.
New share? Yeah. Okay. Sorry, guys. I'm kind of an amateur with this stuff. First time I've been on a Zoom call and even doing anything but talking. Okay, there it is.
Yep.
Okay, so these are my 16 stocks. And what I do, like tomorrow morning, what I'll be doing is looking at which stocks have separation and which stocks have are tight, which none of them really are except for maybe Square, and all in large Square, and try to
And you use
that one.
Pre and post market data to determine the
No,
names you're going to trade?
No pre post market data at all. Okay. And this is Square. You guys can see that, and I have a Square where the top of the price action and the bottom's going to be near the 200, and I create what you've probably heard Lance call the fabulous four. That's what Oliver Velez calls it. And what it is the last 45-minute high and low, the last and the moving average is high and low. So we're including the low, or the 200, because that's the low part, and our high and low in the last 45 minutes is also within the Square, and your previous day close, which is here, is also within. So I don't even pay attention to those. I just look for the high and low of the stock price for the day, and whatever moving average is near the bottom. Okay, so what am I expecting is, I'm not expecting, I'm looking for a blast out of this box, either to the upside or to the downside. And so what I do is I'll look at these pre-market, like 5 minutes before the open, and see where price is. If price is way far away, then I know I'm going to be coming back to the 200, so I'm going to play a gap and crap. Or if it's way below the 200, then I'm going to be playing a gap and, what do they call it, a gap and scoop, or whatever you want to call it, to the up position. Okay. And the other ones I'm looking at, and I'll go back to my old screen. Okay, is anything that's tight, and nothing's tight. Well, that's the only one that's tight. What I'm looking for are ones that are far away. So say BABA is far away from the 200, the 20, and the high of that price. They're spread apart. So what I'm expecting is either it going up a little bit and then crapping out, or just crapping out. Okay, so that'll be on my spread apart list. So say I have Square, I got BABA, and I always have Tesla. So those are the three I'm looking at. And I'm just saying that real quick because I don't know what price action is going to be, tomorrow at 6:25, which is my last check, and how I decided last minute. But it's that simple. That's how easy. And Moderna looks pretty tight here too, so that looks like a good one for tomorrow. But that's how I pick them, and that easily. And then if anything's in the news that's of real interest and real exciting, then I'll probably put that on my list as well. And so, like I said earlier, what I'm expecting is either a bust out of the tight zone or a trade in the direction, if it's away, towards the 200, from an expanded, a wide state to a narrow state, or from a narrow state to a wide state. And that's it.
And then you just let the market talk to you at the open to see, is it taking out this level? Is it doing whatever?
Right. Is green taking red? Is red taking green? Is it in the direction of the 21 going up? Is the 200 below you? These are all things that are, make it a positive. Say it opens up tomorrow and price is right here. You can see that, right? Mm-hmm. And the green starts growing. I'm going to just jump in because it's in the direction of the 21. We're in a fairly tight state here because we saw how wide it can get. So we know it can get a lot wider than it is. And if green is above this green, I'm just going to jump right in. After the first minute, I won't jump in the first minute because market makers can manipulate price a lot within the first minute. But after that, they really can't. And so that would be my strategy if green took the top of this right here. And it was in the second minute, like 1:01, 1 minute, 1 second. And then green was higher than here, I would just jump right in. Mm-hmm. And follow my strategy. My strategy is continue 3 to 5 bars up, which would be the first leg. And then take some profits off, wait for it to retrace, fib that first leg, and anything that is within the 50% zone or above, I know it's going to give me a new high. And that's how I would trade that tomorrow.
Do you ever look into, or someone at Sufyan asked, do you look at different time frames, or are you just watching the 2 minute?
No, I have the 1, the 5, the 15, and the daily open with the Qs on the bottom. Mm-hmm. And actually, I could bring probably this into just to show you guys.
And by the way, guys, some things that if you ask, you all have asked some questions Kelly answered earlier. Like Austin, your question he answered earlier, or you could see his chart. So go back and look. If you go back and watch the video afterwards, some of the things he's addressed. And for time's sake, because we only have a limited amount of time tonight, we're not going to go into everything a couple of times. But just so you know. So some things he's already answered. If you missed something, go back and watch the video again, and your question can be answered. Okay, let me go through this real quick. This is okay. Say on my trading chart. This isn't my trading chart. This is just an indicator chart that I watch, and it's on a different screen off to the side. And it has the 1 minute of Tesla, the 5 minute with post and pre-market data on, so I can see it in the morning, like what the pre-market's doing, and then the 15 minute and the daily. And on the bottom, I have the Qs 1 minute, Qs 5 minute with the same pre-market data on, whatever you want to call it, and then the 15 minute and the daily. So what I'm looking for, like
if I'm in Tesla right out the open, I'm looking for the 200. The 200 is going to be a wall, and it's going to bounce right off that 99% of the time and go back. So if it gets even close to that, I'm out. That's what I do. Or if the trade is starting up here somewhere near the 200 and it's a long, I won't take it because the 200 is too strong. Until it breaks it and then retests it and then goes, that's when I'll get into it. But we call, if you guys know the old Western show Bonanza, when I was in another trading room, we used to call this Little Hoss because Hoss was, a big badass. Mm-hmm. And this one, when it hits it, it's on almost all charts unless you have what we call a 21 squeeze, and that we'll talk about another time. But that's when the 21 is pointing up through the 200 and price is ping-ponging between it and squeezes through. But when it's like this and price just goes up, it's going to bounce right off there most of the time. Even if it hits it again and then goes through, I want to be out. I don't have time for messing around, Okay, so that's what I'm looking at on the side. Those are the other indicator charts that I'm looking at.
That's the 15 midnight. Sorry, go ahead. Just answering a question. That's the 15.
Sure. And that's about it.
Blade Man, and I also got other questions about this when I asked people to send something in, was dive into the violence.
Okay, that's like, for instance, can you guys see this bar here?
Yes, I can.
Okay, that's a big, fat, red bar, right? That's a violent bar. The 21's going down and it's above you. I don't have any reference. I'm just going to jump in that sucker if I see it. And I'm going to go in heavy. I'm going to put 100 contracts in that sucker, sell it. And I'm going to let it go down to the VWAP and jump out. That's diving into the violence. And it's big when it's bigger than this guy. This is a big bar here. When it starts getting bigger than that, I'm just diving into that sucker. Okay, that's diving into the violence. And that's just, that's an example. But you have to be aware of it and watching it for it and bored and sitting around doing nothing to do that, or get some good news, that or bad news that Geronimo puts out in the room, and we just watch the price action, see where it goes.
Yeah, you just see it. I mean, I do similar. If I see a big bar like that, it's like, okay, it's like if it just keeps going and you just tell that it's like the same size as the biggest bar you've seen all day or even bigger, it's like, well, I'm jumping in this and let's see what happens.
As it starts growing bigger than like the last big red bar and you're below the 21, you really have no reason not to jump in it.
Yeah,
that's just easy money.
We call that like bending, kind of like, hey, that's not really... It's kind of bending, but it's almost like it's a good bend. If like a bar is just picking
up. It's got like a 90% chance if you get in at a proper time to give you money within seconds.
Yeah. How often do you use VWAP in cases, or in any cases? Is it an important indicator on your thing?
Yeah, to see this dotted line here?
Mm-hmm.
That's my VWAP.
Yep. So
it's on all my charts. And I use it as, just as a reference point. It's not something I rely on, but it's definitely a reference point. And I want to show you my trading. This is my trading screen. Okay, so it shows your stochastics that you actually got me into, and this one's called SMI, and this is the one Kathy uses as well. It's on toss, and it just color coded so you can see green overtaking red, so the momentum's to the upside. I got my volume, I got the ATR, and you can see the little gold line here. That's my VWAP. Okay, and there's one other thing that you probably didn't notice is this brown moving average here. That is the 200 on the 5 minute. So I want to know where that is at all times. So if I'm trading and I'm coming up into the 5 minute 200, I know to either get out or be aware that it's there and know I'm going to have some resistance there and have to be patient to get through this nonsense until it pops. But if I'm impatient or I got to go somewhere, this is where I'm getting out. Okay. Plus I have the algo lines. You can see some algo lines here, and they're around. And I rely on those as well. I rely on everything, but I put a certain weight on most things. What I rely mostly on is price action and where it is in adjacent to the 200. If it's away from the 200, I know it's coming back to it. If it's tight like it is now, it's probably going to go up or down tomorrow. I don't care which way it goes, but it's got to blast through it if it's going down, and it's got to continue up if it's going up.
So
And
if
it's
we
that simple.
hypothetically, if we come in tomorrow and it's flat and you've got the 200 and the 21 like it is now, kind of tight, it sits there. That first green takes red or red takes green. If the red goes through that 200 with some volatility, you're in it short.
I'm in it, yeah.
And then if tomorrow it wakes up and we get a green takes red at the open, it's the flip side of that. You're in it long, and we're going to see a boom, hopefully, from you.
You got it. That's it. And when this space, like for instance, let's say, okay, right here is perfect because at the open, it basically went up. You got two topping tails here, which is a very strong sell signal. You got your price is way up here. Your 21 is here, and your 200 is here. And they're pretty much equally spaced. You know it's at the end of this going up. It's at the end. If it's a little tighter, like here, you don't know for sure if it's stopped until you get a good red takes green, and that's would be under this big green bar. I wouldn't take it till then, and that would just be for a quick scalp because the time of day's lousy. I'm only really interested in the first hour and a half of the day and the last hour of the day. That's really all I'm interested in, unless something's extremely trending, something's really going on in the world that's causing the prices to crash or to go up crazy. I'll pretty much go about my business after 10:30.
Why do you cut out the pre-market data, the pre-market information? Is there a reason that you don't find it valuable? Do you have those levels kind of marked as resistance, or it just doesn't, in your experience, it doesn't seem to be enough of an indicator for what you do to matter?
Well, for one, it doesn't have any indication for what I do other than knowing where price is right before the market opens, and no professional trader uses it. Mm-hmm. I mean, the market opens where the market opens, and the market closes where the market closes. You don't see daily charts with a open, high, low, close that's other than during market hours. It's just not used. So why would you want to use it?
Yeah, makes sense. Let's see. I'm just seeing if there are some questions in here. So for you, were there ever times in this isn't in the chat, this is just something, like, so you've been doing this for 11 years. You had 6 years of non-profitability. Was there something that made you just love this, that you wanted to stay in it, and something that just, and this is like, or is there a time when you were going to quit, or like, man, I just don't know if this is for me, I've got, or I know I can figure this out? What kind of forced you to push through this? Because you're a carpenter, you're like in that thing. What was like, I'm going to figure this out? And what was your motivation there for some of the people that are struggling or that are on that level of like, I don't know if I can do this, I don't know if I can quit, I don't know where we're, have you had experience with that?
Oh yeah, there was a lot of challenges in the early days, and the way I started with Forex. I didn't start with equities. Mm-hmm. And I had a broker that was probably one of the best brokers that was recommended to me in out of Chicago. The Chicago Board of the heck, I can't think of it at the top of my head right now, but exchange. And I was trying to figure this out, and I just kept trying different things, trying different mentors, and trying to understand price action. And I'd have little successes, and then I'd have horrible stubbornnesses to my mind. And when you hear in psychology that a lot of times people think and imagine that they have a better way, and the market has its way, and that's the only way you need to worry about. It's what the market says goes. What you think and feel means nothing, zero, has absolutely no value. So that was the hardest thing I had to learn. And what happened to me was my broker went bankrupt, and I lost it was only like $17,000 at the time, but it was a lot of money for me, being a carpenter. And this is, this is over 16 years ago. This is when I first started dabbling in it. I didn't start really trading or start to learn seriously till 11 years ago. And then I still struggled with, with my imagination, with my stubbornness, with my Irish background, just being stubborn and thinking I knew better. And I did know better. I was a clown. And it wasn't until someone pounded it into my head that you have to have a plan, that you have to follow your plan no matter what. If you want to be consistent, you have to consistently follow your plan. And as the market changes, you have to adjust your plan. Now, the way I trade like this, no matter what cycle we're in the market, it does the same thing, whether we're going up, down, or sideways. Price goes away from the 200 and it comes back to the 200. It never stops doing that. Even in choppy markets, it might not be as extreme in trending markets, but it still does the same thing. And you got to do your OODA loop every day. You got to scan back out and look at it. Until I learned that you really needed an OODA loop and a plan, those are two things that were paramount. My psychology stayed sick, and it stayed sick until I got those two things down. And that was the turning point for me.
I think that's important for people to realize who's coming in and who's doing this or who are trying to learn this, is that it actually does require an account, or sorry, it really does require a plan. And you're not just blindly buying things going long because the market is going up, or shorting things because it's going down. You're going to think you're hitting a home run. Geronimo said it when he was on. Other people have said it when they're on here. You have to actually know what you're trying to do when you're taking a trade. You're not just buying. You're not just selling. You're not just gambling and throwing your money at something. Like, this is not Las Vegas.
Exactly.
The stock market is not Vegas.
Think about a professional athlete. Think about a professional musician. They play once, twice a week, maybe once, twice a month, but don't they practice every day? Every single day. Even if you're not in the market, you should be going after your charts, doing your OODA loop, making your plan, and watching and go back weeks and just scroll through your charts, playing your plan. It's not costing you anything but time. And then you just play your plan through the scrolling charts. This is your practice. This is you're going out to the field. You're throwing the ball. You're making, tosses. You're practicing your musician. You're practicing your notes. Whatever it is, you are practicing your skill of your trade. This is your trade. This is something you want to learn and be proficient at and make a living at, so you can quit your day job and work an hour a day and go play golf, because that's what I do. And that's what a lot of guys in our room do. So the only way to get proficient at it is A, make a plan and make it as simple as possible, because hard plans are hard to follow. 2, follow your plan no matter what. No matter what you think, no matter what you feel, follow your plan. And 3, practice, practice, practice. Those are the 3 things that'll get you where you need to go, because without those 3 things, you're just like Gator says, you're in a casino throwing money down on the table. And if that's what you want and that's what you're here for, God bless you, because you're going to lose your money, because there's a lot smarter people than me in this game. And I just contain certain information within a certain time for me to play. And once I'm out of there, I'm out of there.
You take it, you lock it in, and you are happy with what you get. You enjoy the rewards of it. You're not chasing the next, I assume you're not chasing the next high, the next, whatever breakout. How do you handle, or did, because you were older, and maybe this is a younger person's thing or a scalper's thing, I assume it's with everybody at different time frames, but the greed factor of, like, you're making this, man, I could just wait for the next one to come in. I could just hit this one with more. I could do this. How do you combat that on a day-to-day kind of, basis doing this? Or how did you earlier on? You've been doing it for a bit. It might not be much of a problem now for you, but.
Yeah, it's no problem for me now. But again, in your plan, you need to have a line item that states how many losses you're willing to take, how many wins you're willing to take. What time frame are you going to play? Are you going to play for the first hour? You're going to play all day? If you play all day, you're going to lose all your money. I'll tell you right now. And that's what you want to do it. Are you going to play the first hour and the last hour? But write it down in your plan and do it and follow it. That's as simple as that. You just have to suppress those animalistic greed and fear that is natural to all human beings. And the only way to do that is by having a plan, reading it every morning, and say, okay, green takes red. What do? I look at my plan. Okay, it says I buy. So I bought. And I get 2 legs up, I'm out. And so you're out. And don't deviate from your plan. Just stay within your plan. I have 5 wins. I'm up, $10,000. Okay, I'm done for the day because I know I'll probably give it back. And either you have a plan and follow it like that, or experience in the market will discipline you, and you'll gather a plan based on pain instead of reward.
And it's much better to learn these things without paying the high tuition costs, as Geronimo says, because the market's going to make you pay, and you can either pay less to learn this. You can listen to what Kelly's saying. You can listen to some other people that come on here, or you can go learn it yourself, and you can lose money, and you can pay that tuition. And I'm going to ask Con asked another question, and while you're getting to this point on the chart, I'll ask a follow-up. So Con asked a follow-up question. So for Friday, February 25th, his chart, what did you do with that big double wiki noon Friday candle?
I jumped in right here. I jumped right in right there.
Noon on Friday?
Yeah, I'm on Friday.
Okay, yeah.
I jumped in right once I saw the second wick develop. Here's what's happening with this. This is all green when it opens, green. Then it becomes a wick, which is red. As soon as I saw a little bit of red on that candle right there, I jumped in and put my stop above the high. Okay. Then I fibbed this guy.
And I think you called this earlier too.
I called this in the room. Yeah, I called this one in the room. And I played it down to the 50%. Right there. See where that big bar went right through the 50%? I just held it and then probably let it go somewhere around here. That was my day. I was done.
Time to go work on that putting game or that short iron game.
That's it. Took my daughter out to breakfast.
That's even better. That's even more. So how did you come from doing this? Like, this is not what Mark initially, a lot of what he did in the NewsBeat room. We're kind of scalpers, quick in, quick out. It's a lot focused on the psychology. What brought you to the NewsBeat room to kind of being a part of this family and this community? Well,
it's just the community. And I'm the one that turned Mark on to green takes red, red takes green.
I remember that, yep.
Just by the way. And he was like, wow, that's a great idea. And I showed him, how I trade. And, he was so used to the quick reward and that's the problem with scalping for quick rewards is it becomes ingrained in your DNA, and it becomes extremely difficult to hold longer because now you see the price. You're watching your P&L and you're watching it go up and down and up and down and up and down. What I do is I don't even have my P&L on my screen at all. I don't see it, and because it would probably make me nuts. So I just watch the candles. That's all I watch. It's just the candles. And if I have at least three red bars, because that's a Fibonacci number, 3, 5, and 8. Those you'll notice in a string of like a leg up or a leg down. They're either 3 of the same color, 5 of the same color, or 8 of the same color, depending on how strong it is. But once I see at least 3, I know I'm close. Well, I'm real close to my target anyway. I know I'm out and I got my money, so I don't need to watch my P&L, And my stop, I know where it's at. And one thing I didn't mention was every big bar, I replaced my stop on top of every big bar.
Yeah. He's saying
So
noon, by the way. Did you do anything with the noon wiki ones? I don't see overly wiki, but at the noon on that Friday. So at the top
no,
there.
I don't trade during noon hour.
Okay. It doesn't matter. You leave it alone.
It's just going to take your money away.
Yeah, I don't do much there either. And but what you're saying is so right. And I think that like you guys who are in the room, like we joke, we're like, I'm Kelly Jr. in this thing. I'm in it for more than 45 seconds. It's like, yo, I'm holding forever. There's nothing, it's like it's 5 minutes later, I'm still in this trade. Woohoo!
Well, I used to joke with Mark, and he had diarrhea hands, and I had diamond hands.
I mean, that's how it goes. Stuff just falls through. I've begun to train myself, and I've done some videos on it for finding, and now this has helped me a ton. What you're doing here, like this is extremely helpful for me, and
Good, I'm glad.
and I hope for other people here too. So if it is helpful, smash the like button. But that being said, like I tried to develop ways to find strategies, and what the market was telling me, using stochastics, is thanks to little Curbster who came up with that, using those to find entry points where I could let a play trade out. And I watched your stuff, or when you talked, and someone created a Google Drive of some charts that you did, and I started using those kind of in pair with stochastics to kind of match up the 21 and the 200, and let's see if this. And so, but this has really helped me put a lot of that together. Not that I'm going to stop doing C strategies. I love the C strategies, kind of the quick stuff, the diarrhea hand trades, but to be able to actually look at a chart, to zoom out and to find these locations, and to be like, look, Tesla's gapped up, this amount. Look at the spread here, and this between the 200 and the 21. And then when you say, no, this is gonna tank or something, I know what you mean, and I can look at it and I can see the same trade, because there's so many nights when we're on here and we're saying you have to understand what Kelly is doing, or Geronimo, or Gator, or CT, or Boof, or anybody, before you actually just trade. Like I can't just follow you out of nowhere. I need to understand.
I wouldn't recommend it at all.
Yeah. It can't just be trading for no reason.
Right. And even for C strategy, something like this, you would see that, that the red took the green out right here. Mm-hmm. And even if in a C strategy on the 1 minute, you could easily jump into that and be out at the bottom of it, and could be your day, depending on the size of your contracts.
Yep.
But I'm just a little more greedy, and I just want it all. I want it all.
You want that whole 50% retracement to the 200.
That's right. I know it's going there. I mean, 90% of the time it goes to the 50%. So why wouldn't I wait for it?
Yeah.
And especially when you can move your stop from here to here. Now you got zero risk, and you got hell profit. So even if it does go against you and stops you out, you still got a great trade there.
I mean, you're
so
$10 just in the stock. That's 10 points in the money.
Exactly.
Right there. And the options are probably more than, the options are probably significantly, green on that. And that's a total of like a 20-point drop to the 50% in the stock. So,
right.
You're like, don't get greedy when you see that. If you do something like this and you see it, do you have a warning for people? People watch this. Tomorrow is Monday. They're gonna come in, and you've already said this warning. I would like you to say it again. But do you have a like somebody wants to do this? They're waking up tomorrow, like, okay, I got this. Now, I know if they're in the NewsBeat live room, they can be like, hey, you're busy. You're looking at a lot of different stuff. I'm sure they could ask, this name, or whatever. But if they're just looking at something, is there a word of warning for them jumping into this? Is there something you would like to tell someone that's now going to start trying to learn this from a scalper, a quick scalper, or something else, to start implementing this in their strategies? I know you've already kind of said it, but we'll say it again in case people didn't hear it.
Yeah, I mean, if they want to try this, again, do it with one contract or one share. Make sure you write down, I won't get in this thing till green takes red or red takes green under the 200. Okay, Tesla's above the 200 right now. Mm-hmm. What it will be tomorrow at 625, we don't know until 625 hits. We can make new decisions at that point. We might ignore it all day. Who knows? It just depends on where it is. But there's got to be a rule in your plan that says, I will not get in this until the trigger is triggered.
Mhm.
You don't like, there's no front running in this strategy. I don't front run anything. It's
Mhm.
1 cent above the high. That's when I get in because it moves so far. Who cares about front running? It's not a trigger. For me, a trigger is a trigger, and front running is a loss, setting up for you. And if you're doing sizable contracts and you're using a full bar for your stop, you're going to get killed. So there's no front running. Um, so that would be my warning: is one, do it extremely small size. Two, have it written down before you do it. Make sure you're following the rules and you know the rules because you go through this recording and write them down because they're all pretty simple.
Mhm.
It's either narrow or it's wide. If it's wide, you know what to do. If it's narrow, you know what to do. Is the 21 pointing up or is the 21 going down? Is the 200 flat? Is the 200 trending up or trending down? These are all things you got to ask yourself and write them down, and that help you make your OODA loop decision-making process.
And I said that for a reason, like asking you to repeat this thing. Follow those rules, guys. Like seriously, follow those rules and take everything that Kelly is saying here into account. Like go back, watch the video, write down your rules. If you have other questions, you could message, Kelly, you can message me and I could, we can figure it out. Like,
We can talk about it in the room, and if
yeah,
it's not in the middle of the trade, I'll be glad to answer you.
there you go. He's very active in the room and he's not always in trades. And if you're just drinking coffee, and people are asking you about different things, you can definitely, he can answer them, and he's very very like I've almost unless you're in something that you're watching, you're always very active and answering people's questions and stuff. And I know a lot of people have learned a lot from you. So don't just do something and get yourself wrecked because like the K-Man showed the difference in Tuesday compared to Friday and what they did differently. You might just look at something and not completely understand it yet. Get acclimated. Take time to get acclimated to understand it. If you're going to be trading, you're going to be trading for more than just Monday and Tuesday. So take more than just Monday and Tuesday to learn this and to kind of implement it slowly until you're like, okay, I get it now. And you've got some confidence and you can kind of go there. And how did, or sorry, if you were going to say something else there.
No, I just want to reiterate that if you feel that price is gapped away and you're going to go in the opposite direction, it's paramount that price not only is away from the 200, but it's away from the 21 as well. If the 21 is near where the price is, don't take it because it's not far enough away yet. It's got to be kind of equal distance, not exact, but kind of equal distance from each other. The high of the price, the 21 and the 200 have to be spread apart. Can't be just the 200 spread and the 21 right on the price. So that was part of probably Mr. K's question with Monday's trade.
Yep, I think so. And for Praveen asked, what helped you persevere for those first 6 years? Was there something specific that kind of helped you persevere through that time?
My Irish stubbornness.
You're like, I'm gonna figure this out, and
Come hell or high water, I'm doing it.
it's like,
Damn it!
I'm not gonna lose. There's that military background, mixed with that Irish
Yeah, the
background.
military. My dad speaking in my mind. The way I was brought up. Just stubbornness to get this thing. Even if it was. Because number one, I really enjoyed it, and you have to really enjoy doing this in order to succeed at it. And I like talking about it. I like sharing what I know with people. It's just, I like everything about it. And I wish I learned it when I was 16 instead of 50, but takes what it takes. Right.
Yeah. And at this point, God had you at this point for a reason. And if you should have made it earlier, you would have made it earlier.
That's right. Exactly.
And someone asked or said something earlier, and they asked me if they think that my military background helped me jump in to mark stuff, like quote unquote taking orders and just doing it. Um, as opposed to Kelly, who is an independent person who worked for themselves. Well, Kelly was in the military. He said at the beginning of the show,
Yeah.
and so was I. And I think the military part, the military is more than just following orders. And to someone who's not been in it, um, it is that to an extent, but it also takes a level, especially as you get past the private and like lower levels, where it takes independent thinking and problem solving, and to look at stuff and understand if it works and if it doesn't. And if someone's like, hey, do this, it works, and then that person has shown that it works, it does make it a little bit easier to kind of, like, for instance, what Kelly's saying here, I wouldn't be like, man, I don't like, I'm like, yeah, let me go look at this and try it. And I could just go in and try it without necessarily fear. So I would have to do some thinking and maybe a show on what the benefit of the military training is. And I know, Kelly, you said it helped you greatly. I think it helped me too. I'd have to spend some time thinking about what specifically about the military helped me as a trader.
Well, I think it helps me follow through with what I say I'm going to do.
Mm-hmm.
Do what you say you're going to do. So if your plan tells you to do A, you do A. If it tells you to do B, you do B. You don't deviate from that, because your plan has already proven that it thinks better than you do, and at least in my case, it does. So if your plan tells you you need to get out after one bar, you get out. You don't say, "Oh, maybe I'll give it one more." No. And part of being in the military helped me anyway with the discipline to follow the orders of my plan, and to be and also execute when I need to execute. So you don't hem and haw and say, maybe I'll get in there. Or maybe no, you're in. Boom, that's it. You're in, and boom, you're out. You have to be able to be decisive, see your OODA loop, be decisive with your plan, and act on your plan. Without delay. Just boom, boom, boom. That's it.
And it might have been something like that was the same. Like, as I'm thinking about it, it's that we called it violence of action. It was like, you could be wrong, but you need to be wrong like all the way, kind of. It was like, if you're going to do something, go do it. You can't wait to pull the trigger. You have to identify and shoot. If you're going into a building and you're kicking in the door and you're doing your room clearing drills or something, it's not like, hesitation gets you killed. Hesitation gets you killed all the time. It gets your teammates killed. So it's like, you kick in that door and you do what you're trained to do and what you're supposed to do. You identify the threat or the non-threat in front of you, and you act instantly. And as you said, you follow your plan and you follow your trading, or your training, not trading. And I think maybe that is the part of the military that kind of helped me with this. It was like, oh, this is a Mark 1. This is what this setup is. Okay. It's like, oh, the setup's there, bye. Because there's no hesitation. You hesitate, you get killed. So, that's
and the same in the market. If you hesitate, you get killed. If you chase, you get killed. These are the things. You'll start panicking. Especially if you're sized up. You just got to follow your plan. If you miss it, so what? There's always another one. I mean, there's 3 legs in most moving stocks in the morning before 10:30. So, I mean, there's plenty of time to get back in another one. Was wait for a pullback, wait for green, take red take green, and jump in. You know what your risk is that bar that you just overtook, and 1% above it or 1 cent below it, and you already know your risk is taken. You've made your decision. You live with the consequences or the reward.
Yep.
Simple.
Easy day. I see.
But remember, you can only lose 1 bar. That's it. But you can win many, many, many bars. So keep that in mind. When you size up in the morning or in the afternoon, which is the only times I trade, I'm only going to lose 1 bar. And whatever that bar is worth depends on the size I'm taking, but I can win many, many bars. So always keep that in mind. It'll keep you in the trade.
Good deal. And that's a good way to think about it. Especially, like you say, if you know where it's going and you've seen this and you trust this and you believe these strategies, and you spent your time behind the keyboard watching them and doing them, it's going to help you kind of see that and do that and take away that fear. And it is, like you say, training. It is that training. You're training yourself to know this and to do this. And yeah, sure, you're going to lose some. Like, you're 100% going to lose some. and that's just a part of it. And you have to accept it, and you have to continue and push through and fight through, and don't make it where that one loss, if you take one loss right now in this trade, you're done as a trader. You should never be at that point, unless you got a $500 account or something like that. But generally speaking, if you're actively trading, you're a full-time trader, you should not have like, man, if I lose in this trade, I'm done for the year. Like, I'm done. I've got to go get another job.
Right. You shouldn't depend your life on one trade for sure.
One thing I've seen you do, and a few people question, and then I'll let you go. It's been an hour and a half. I know you've got to get to the family dinner, so
Yeah,
I don't want to keep you. So
I'm already
final.
late.
Oh, sorry about that. So final question, and then you can go. I see you getting out of trades like 50%. Hey, I'm out 75%. I don't think you had said this yet. So do you have? Where's your exit points along your trade? Your take money parts, and then we'll
Okay,
call it quits.
typically I'll get out 100% after a leg is complete, and a leg is typically 3 to 5 to 8 bars, and it all depends on how momentum's working. Now I'll take 50% off when my when prices moved like considerably. Like on Friday's trade, I jumped in after that tail got taken out, and I got out half of it, 3/4 through that second bar, because momentum was just going like crazy, and I had to take some off. And then I took the rest of it off at the 50% pullback
Okay. That
from the gap.
Yeah. I just wanted to ask that. A few people had asked. So
Yeah,
I
but
see you doing that.
typically I really don't have a straightforward plan on when I take the 50%. My goal is always to take 100% at the end of the leg. So if it's where I feel is halfway, or I see some, if I look left and I see some resistance, like a ledge or something, like Geronimo talks about, I'll take it off there. Just because I know there's going to be some resistance or support at those points, and I want to take some off in case it goes against me. So that's kind of my hard fast roll.
Good deal. With that, I don't want to keep you too longer. I apologize. I like to respect your time, and for coming on the show. Don't want to run you too late. If you make your family too mad, your wife might be like, "You're not allowed to talk to that guy anymore."
Yeah.
So, thank you so
All right,
much.
bro.
Thank you.
Appreciate it. And thanks for everybody for listening to me gabble. And if I can help you out during the day, just, ask questions. If I don't answer you, it's because I didn't see it. I'm looking at a different screen because I have a different computer that has the room and other charts on it. And my main computer has 3 screens where I'm mostly staring at. So I look back at the room computer, to check chat once in a while, and sometimes I'll miss stuff. So if I miss you, don't get your feelings hurt. Just repost.
Mm-hmm. And with that, guys, and Kelly, I hope you'll come back. Guys, rewatch the video. Go back and look. If you have questions before you ask them, go back and rewatch and make sure that they weren't answered. If they were, come back. Hopefully, Kelly, we can do this again sometime. Maybe do a follow-up with a little bit more detail, or maybe some fine-tuning of a few things at some point, based on our schedules and times. I'd love to have you back. I can't thank you enough for coming on. This has been extremely helpful to me, and I have no doubt it's been extremely helpful to the other people on here. So I really, really appreciate your time.
Really glad to help.
Yes,
thanks,
sir.
Gator, for what you do too, bro.
Thank you. Well, hopefully we'll keep doing it here and keep pushing out content. So, guys, I'll see you all tomorrow. I'll be trading normal day tomorrow. I'm sure Kelly will see you too. Everybody in the NewsBeat live room in Discord. I have an announcement in Discord we're going to send out in a little bit. So keep your eye out for that. But other than that, guys, catch you all tomorrow. Get some rest. Have a good rest of your weekend.